Talk to us about, at least for today, the bullishness, the resiliency of these equity markets after Jobs Day, after that Fed meeting last week.
Well, I think despite Chairman Powell's over-hawkishness that he presented, I think the market is convinced that he will see the light and he will pivot soon and realize that rates are high enough and inflation is coming down quite dramatically. I think one of the interesting things was there was a question posed by one of the reporters about, well, there's two housing indexes. That one's forward-looking and current, and one is backward-looking, which the BLS does. And Powell stood up there and said, yeah, but I prefer the backward-looking one. And that's it gives you a totally different view of inflation. If you look at the forward-looking price indexes, core inflation has come way down, in fact, almost to zero. If you look at backward, we're going to see, like on Thursday, CPI, that backward-looking index is going to add to the core for many months to come.
I am curious here, Professor. I mean, we were talking a little bit earlier in this program about some of the relatively bearish commentary out of certain strategists. And then you actually have some relatively encouraging notes out, including also from the folks over at Goldman, from their chief economist over there, Jan Hatzius, about the idea of a softish landing, the idea that we've already seen enough of a pullback in economic activity and a pullback to a certain degree in wage growth, and that might be enough to help cushion the fall.
I think a soft landing is still possible. I mean, again, if the Fed sees the light, stops it, and talks about the fact that, we're going to pause. If we see the continued downward, I think they should, begin by the middle of next year, really beginning to move that rate down, not move it up anywhere near the 5%, 5.5% some people are talking about. I think we could really have a soft landing and a great market next year.
Jeremy, do you think, though, that the conditions will be there that will give the Fed enough cover to actually move rates down rather than holding them where they are?
Well, I think if they interpret the statistics properly, see the housing market going down, commodity markets going down. I mean, energy is basically holding its own. Cargo rates are going down. Freight rates are going down. Yes, wages are still going to go up, but most of that is catch-up mode. And Powell himself said that, he doesn't see that, the wage going up is directly an inflationary pressure, even though he talks about the tightness of the labor market an awful lot. And take a look what's happening in tech land in terms of potential layoffs. I think that's going to spread next year, and we're not going to get anywhere near the tightness in the labor market.